I'm Owen Bigland. This is the Inside Edge video blog. Okay, time for one of my quarterly market updates. This will be the last one for 2024. This will be for late fall, early winter. Stats just came out from the Greater Vancouver Real Estate Board a couple of days ago, so I'll go through them with you guys. The last update I did towards the end of the summer, I had told you guys summer 2024 had been one of the slowest summers I had seen in a long time, probably at least 6 or 7 years. Not to say I wasn't selling homes, I was still staying pretty busy, selling homes every month and listing properties, but it was definitely a slow month for volume, probably 20% less, 25% less than what I would do in a typical summer, or at least averaged over the last 5 years. The fall market here has picked up a little bit, but still I would call it, fairly sluggish, as I'm going to get to in a minute here. Things are still selling. It depends on what you're selling first off, which I'll go through in a minute, and where you're priced at and the location, if it's in downtown Vancouver or if we're talking out in Brentwood. So the latest stats from Vancouver Real Estate Board just came out. Sales for October were up 30%, so big jump. Now, that's not saying too much because the month over month from September was a pretty slow month. So it was a fairly low hurdle to jump over, but sales are now starting to move up. We had a big jump, 30% in sales, but they are still 5% below our October average over the last 10 years. So they're still slightly below average, but we did have a big jump from September of 30%. Listings also continue to trend higher. They're 26% higher than what our 10-year average is. But let's move on to the stat that I always talk about, the active sales to listings ratio. It's the cleanest stat. It's the best stat to use because it gives you a really good snapshot of where the market is, because it looks at not just sales, but it looks at listings. And this is the best stat, but it's a stat that you never hear about. I always complain about it. You never hear about it talked about in the media or anything else. Instead, you'll hear that sales are down 28%, market's crashing, but it means nothing unless you take it into consideration with the listings. So the sales to active listing ratio, just quickly, anything below 12 is a buyer's market, from 12 to 20 is balanced, over 20 is a seller's market. So in the detached market, we are currently at 13.4. So we are still in a balanced market on detached, barely. We're in the low end of a balanced market. Now this has fallen. In the spring, this was hovering more around 15, still more in the middle of balanced. So it has been slipping a little bit, but we are still in a balanced market for detached homes. Condos, on the other hand, are still in a seller's market at 22.5. And I know this surprises a lot of people, but I've told you guys for many years on this blog, that especially good quality one-bedroom condos in downtown Vancouver, or maybe Kitsilano or Fairview or Mount Pleasant, are pretty much always in a seller's market. There is just so little inventory. It rarely ever dips its toes into a balanced market. If it does every 10 years or so, it doesn't last long. It's pretty much always a seller's market for high quality one beds, and I'd probably put good quality 2 beds priced under $1 million in the Vancouver area, downtown Vancouver, Kitsilano, let's call it Mount Pleasant, Olympic Village area. So prices continue just to kind of tread water. They're holding strong. And a lot of people were predicting that this year was going to be terrible, mortgage cliff, tons of people forced selling, foreclosures, all that stuff. None of it came to fruition. Prices month over month are down 0.6%, so half of 1%, and that's kind of been the way it's been going since the middle of the summer here, kind of treading water. But of course, 30% sales jump for October over September. I probably see that continuing now as we're in November. I think the big thing, of course, is the interest rate cuts. We just had another 50 basis point cut. Every one of those cuts we get is going to spur more and more buyers into the market. Looks like we're probably going to have another 50 basis point cut here in December, and then, plenty more in the early part of the new year. So these rates are coming down fast and furious. Every cut will bring out more buyers. Make no mistakes, guys. These interest rate cuts, inflation now has come down, but a lot of people get confused. I think it's not so much about inflation now. The Bank of Canada is dropping these rates pretty quick now and pretty aggressively because of our economy. Our economy is not great in Canada right now, and that's the real reason why they're getting much more aggressive on the interest rate cuts. But when you break down these stats just quickly, they're pretty broad. This is for the Vancouver Real Estate Board, so it's taking on Vancouver, Burnaby, Richmond, Coquitlam. And it doesn't break it down by product type. So what I would say for the condo market, what's bringing this market up into a stronger seller's market is one-bedroom condos downtown, good quality one beds, two beds priced under $1 million, downtown Vancouver, Kitsilano, Mount Pleasant, Fairview. That's bringing this number up. What's bringing it down, the averages, would be luxury condos. We'll call it 2.5 million and up in areas like Cole Harbour, Yaletown. That market continues to be a bit sluggish. I just had a luxury condo I just finally sold about a week and a half ago. Took me 3 price reductions, had it listed since early June. So it's a tough market, it's a real grind. I think I had about 4 offers on that home. Low offers, couldn't get the deal, made the ground up in the deal, and they collapsed. Couldn't get a deal done, finally did it done last week. So it's a bit of a grind in that market for sure. What's bringing it down in the condo market would be, some areas like central Richmond, Brighouse, Brentwood, I've talked about a bit. A lot of inventory in those areas right now in an area like Brentwood. But overall condo market is still in a seller's market at 22.5. Right now, as I speak, I'm holding the highest number of listings I've had all year. I've got 11 listings right now. Just sold one last week. I've got accepted offers on 2 others. So I've got an elevated listing count here. Again, it's a bit of a grind getting offers. A lot of them are a little on the lower side. My one-bedroom stuff generally sells pretty quick. Detached stuff is a little bit more stagnant for sure. But I do see this market, as I've talked about, getting better as we move into 2025. I think we really only have about another 3 or 4 weeks left in this market. I leave for vacation usually the second week of December, and I don't come back until the first or second week in January, and I'm doing the same this year. A lot of realtors go away. I've got one more listing I'm putting out before the end of the year. It's an estate sale, trustee sale, so I have to list it. But all my other clients that I've been in talks with listing, I am telling them we put it off until the new year. Listed in mid-January when I get back from vacation, and we'll go from there. I still stick to my prediction that spring 2025 is going to be a pretty strong market. We'll probably have at least 2 or 3 more interest rate cuts then. Could be one full percentage point less than what it is right now. On that note, my variable rates have been coming down steady. My current variable rates right now are at 4.9%. That could be at 3.9% in early spring next year. So that's going to bring a lot more buyers out there. I would say if you're in the market to buy a home, it's a pretty good window here, especially if you want to buy a detached home or something a little more in the higher price categories. One beds is still pretty tough because there's just not a lot of inventory, at least for downtown Vancouver. Brentwood, there's tons. Not a bad window right now. I would say you should probably be aggressive here in the next 4 or 5 weeks before year end, because I think come 2025, spring, interest rates are going to be a lot lower and you're going to have a lot more competition at that time. And when that happens, prices tend to start trending up again. I'm Owen Bigland. As always, thanks for watching. I'll see you next week.